I now remember I was thinking about your notes, and you're talking about the pound as maybe a risk indicator these days.
Yeah.
That's why we increasingly see the pound gain as we see stocks gain in London, something that we haven't seen. We've seen the inverse of that normally. What do you think this means that we're seeing the pound gain now, and how related is that to the Brexit brouhaha?
Yeah, well, the pound gain is certainly a strong currency that correlates with risk, and historically that's been the case. I mean, we take as little as March, for example, cable traded down to 115, followed by a global stock market recovery, and in turn, cable trading up to close to 135. So I would suggest that the pound risk correlation remains intact. Historically, it's been the case as there's solid price action precedents for this, and I would suggest that will remain so in the future. And it's a solid reason for that, the risk correlation, given the UK's status as a financial centre, and significantly high proportion of the economy is devoted to financial services. So it makes sense to me as kind of the pound being as one of the financial economy globally. So I would expect that risk correlation to remain intact. That said,
Yeah, I was going to say, that said, we do see the domestic politics perhaps pulling the pound in another direction. Good morning to you, Neil. So to what extent do you think the market is pricing in the possibility that we get no trade deal between the UK and its current biggest trading partner? Is the market complacent around the percentage chance of no deal?
Yes, I sense there is an element of complacency currently. The percentage chances of a no-deal Brexit are elevated from about 10% only a couple of weeks ago. And with the rise of the internal market bill, we're probably something in the region of around about 30%. My own sense of things is the percentage stands at approximately 50-50, quite frankly. And I think it's real and live, the chances of a no-deal Brexit, and I don't sense it's anything remotely factored into the pound market. So I think there's a possible chance that we rise above 50% of a no-deal Brexit. Now, that being the case, then cable is positioned pretty light, really. It's probably a move to small short. If we go back a week, the cable market was actually pretty much flat on net. But even now, the positioning is light. And certainly not reflective by any sense of a no-deal Brexit and a breakdown in trade negotiations and the internal market bill passing through the House of Commons and the House of Lords, which is quite possible. So my personal sense of things is sterling is not factoring in a hard Brexit at all. We've seen cable move from 135 down to 128, but it's only really been the last 2 or 3 big figures that begin to reflect a hard Brexit.